You have to preserve that clarity. Once you gain it and you desensitize yourself to the outcome, you're not pursuing right. You're pursuing following your model. Those rules, if they're sound in their logic, they will preserve you if you're able to listen to the analyst in you. But if that analyst is trying to warn you, listen, buddy, you got out of the chair and the gambler has slip seated with you. You think you're driving, but you're not. You're riding shotgun with Retail Rick. And he's had a little too much to drink on St. Patty's Day. And it looks like he's aiming for the next fucking tree. So what are you going to do? Ask for the keys. You got to take that wheel back. How does that happen? Take half the trade off. And if you can't take a half, then you close the trade. And then you congratulate yourself. You give yourself positive self-talk that you identified that you were in troubled waters. You lost sight of what you were doing. And now it became an emotional roller coaster, which turns into a psychological arm wrestling match with you being and pursuing right. I was right. And what will happen is when you close the trade or take half off, one of two things are going to happen. It's going to stop you out and you'll feel what? Good. You'll feel good that you did that. But some of you won't feel good about that because you'll be thinking, I should have took everything off and I would have had a bigger profit. What are you doing there? Pursuing being right. Instead of saying, I took half off, it came back and stopped me out on the remaining portion, whether it was at break even or in profit, matters not. You're going to go to the calculator and say, this is what I had on the trade right when I felt like that. I should have did this. That's not how you grow. That's how you poison your perspective. You create and foster anxiety, performance anxiety specifically, because you're measuring every decision and placing so much emphasis on the outcome and it needing to be right. You don't realize you're putting yourself in this mental prison. You can't work efficiently in these markets where you're constantly placing so many limitations on you, placing all this unnecessary weight on your shoulders that you have to be right all the time. You don't have to be right. You don't have to be right. You have to follow a sound model and stick to that. And as a derivative, a default, as a consequence to doing that, you will see results. And those results need to be completely detached from emotion or psychological need, the necessity to be right. And it sounds hard. It sounds almost impossible right now, especially if you're new. But those of you that have gone through these experiences because you've traded with real money or funded account, and you got out there and you realized you knew exactly what you were feeling. It was a reminder that you did this too soon. But hey, we're here now. We are here. We showed up. Now we're going to show out. And unfortunately, you end up losing your funded account or you blow your account because you'll let that one losing trade do what? Take you completely out of the game. Now you have to do something bigger, much more monumental, because you have to get a feel-good moment. And you'll over-leverage on the next trade, or you won't have a stop loss on because you want to be right. And you lose all clarity and you think that what you're doing in that next trade is going to pan out. You just have to submit to more drawdown, more time holding on to it. And what is happening is this: you are now holding on to a losing trade that you will not identify as, but you're going to be using the logic of your model, which is hold on to your runner. But because you took your eye off of the process of following that model, you're now applying part of the logic that you're using in trading, but you're holding on to the losing trade. You're submitting yourself to that trade, even though it's warning you and telling you, the analyst is talking to you, this is wrong. You know it's wrong, but you won't close it because you're not trading for profit now. You're trading for being right. You are arm wrestling the marketplace. That's what you're doing. You want to be smart in the eyes of someone else that you're going to share this with. And you're absolutely undermining yourself. And when you do more damage or blow the account, blow the funded account, your max loss day or whatever it is that takes you out of that, you will be miserable. You'll punish yourself. You'll relive those moments over and over again. And I can relive them all when I was 20, just like it happened yesterday. No one's going to be as hard as you are on yourself. You just aren't making it public knowledge to most of everyone that would be paying attention to you. Now, some of you make that mistake and you go on social media, oh, this is hard. I'm always screwing up. You're inviting more people to confirm what you're feeling, which is going to do what? Anchor more weight to that negative result, which is going to do what? Create fear, anxiety, depression, and that's not how you grow. You have to know that what you're doing is not a pursuit of being right. In the moment, the very moment that you now have these impulses inside of you, that you have to prove something to yourself, or worst case, prove something to other people, you're not trading your model. You're not even trading soundly. You're gambling on the chance of you being right. You have to release all that. You have to stop doing that with your trading. You got to stop doing that with your studies. You have to submit to whatever happens, as long as you're using the processes and protocols that you've adopted as your model. You're going to accept whatever the results are, because you have done enough research to know that the things that you're trying to pursue repeat, not just once in a blue moon, but they repeat almost daily, if not every day. Every day, the market's going to run for some hourly old high or an old low. This is the part where you start writing down notes, folks. Every day, there's an intraday range that has an old 60-minute high or old 60-minute low. In between where the market is at market price, whenever you're sitting down and looking at your charts, you want to identify them because there's liquidity there. This is the surest way for you to know that you can go in there every single day. Every single day, this is forming. There is not a day that this does not form. Okay? This is an everyday bread and butter logic. You mark out your 60-minute highs and lows. You wait for some shift in market structure that would be gravitating towards that old high or old low. Once you have a shift in market structure, using just what I taught in the 2022 model, you wait for a fair value gap. As soon as it trades into it, you engage. Half of the range from wherever you're getting in to that old high or old low, whether you're aiming for a bull move or a bear move, matters not. As soon as it moves half of that range, half your trade comes off. Stop the break even. And you submit to whatever happens then. That's it. That's all you have to do. That is a complete model. Don't risk more than 1%. It might be 5 handles, it might be 20 handles, it might be 30 handles. How are you going to know? The range between where you're trying to buy and where that old high or old low is. That fair value gap exists every day. Liquidity above old highs and old lows, below old lows rather, that's there every day. And you're complicating things. You're trying to bring all these things that I've taught, hoping that they're all going to do what? Allow you to accept no losing trades and be right all the time. And being right is a poison to a new developing student. Your goal is consistency. You want to be doing the same things over and over again, using a model that delivers consistently. Doesn't mean it's 100%. It just means over a large sample size. What's that mean? 20 trades. 20 trades, you're at about 70% on side. That's a good measuring stick. But what happens if I'm not 70? You keep working until you are. And then once you get to that point and you're 70% strike rate, how could that possibly be, Michael? Come on. That's too high. It's unrealistic. All the books say, I'm telling you, don't read into those books. Those books are written by authors that has sold a book. That's what they're doing. They're selling you a narrative, a plot. They probably don't even trade with what they're writing about. I walk into these live markets, whether I'm sitting on Twitter, tweeting out the very candles that we looking for in the draw on liquidity, bending time and space to precision, and you see your chart printing it later on. That's not hindsight. When I'm on the live sessions, I'm calling the minute candles, explaining what's going to happen, and giving you the narrative. This is what you're supposed to be doing for yourself. You create these little laboratory experiments, and you go in every day. Anytime you get a chance to study, that's what you do. And every time you record what you're feeling, how you felt. And the goal is for you to have indifference. You can't simply just write the word in your journal, I was indifferent to the outcome. You can't fake that part. You need to be observing where you're feeling these anxious moments where you feel like you're in troubled waters. They will materialize in the same places all the time until you cope with that. You replace it with a positive habit. What is that? When you feel it, you kill half the trade. If you can't cut it in half, you get it all off, done. And what that allows you to do is you reset mentally and emotionally that now, okay, I've paid myself. I've removed a great deal of the risk. I've profited from it. And now I have a free look. I got a free bus ride to get to my target if it wants to go there. But you don't know, and you're not going to know because you're now recuperating from what you just put yourself through, which was stress. If your trades are stressful, you're trading too big. Your risk is too much. The easiest solution to that, drop down in your leverage. I can get out there and I can find these 5-handle runs, 20-handle runs, 15-handle runs, 30-handle runs. And I'm holding on to 5 contracts, 10 contracts because Top Step says I can do 15. So I'm trying to push the envelope. I got things to do, ICT. But it's hard for me to hold a trade. So I get out too early. What am I doing wrong? You're over leveraging. You're trading too big. You haven't given yourself time to grow up into 5 contracts, 10 contracts, let alone 15, what guarantees you're going to blow your account. That's what they want. I want you to trade with 1 contract. Look what I did with the TD Ameritrade account last year. a double D account, trading one contract with lots of losing trades to showcase my students. I mocked up, drawdown, put myself in situations they asked me to do. This is what I do, and this is where I fall victim to it. How would I do that? I went in there and actually did it with real money. Took 25,000 to over 50,000, 5.5 weeks, one contract. Now, $25,000 a month, that's probably good for most of you, even if you are doing well. And if you could get just 1/4 of that consistently, that can change your entire life. Imagine if your mortgage was paid, half your mortgage was paid, half your mortgage and a car note and insurance. That's a blessing. But much like trying to make those ends meet, some of you want to just be able to quit your job right now and get away from Carl and Bruce. And you're rushing it. And you're thinking that as long as I'm right, I'll get there quicker. And quicker is not the right thing. You got to be on time. It's the same goal you have when you go to work. You want to arrive on time, in one piece, prepared to do your job. You can't rush success. You can't. It doesn't work that way. And placing so much emphasis on arriving sooner than what's realistic. Think about it. When I used to have to go to work in the morning time, I had pretty much a straight shot because I'd get up really, really early. Drive a 40-minute drive in 20 minutes, speeding, admittedly. But I hated going home because I would be in rush hour traffic. Think about what you do to yourself sitting in traffic. You know damn well there's 150 friggin' cars in front of the one in front of you. You know that. But your limited myopic perspective is this asshole's holding you up. So what are you doing? You're riding on his bumper or her bumper, looking in the rear mirror. Yeah, look at me, bitch. Look at me so I can tell you you're so-and-so. What did you do? You lost the plot. You got emotional. You're demanding something. You can't move that wall of cars. And being angry about it doesn't move them faster for you. But yet here you are in your car, pissed off, cussing at everybody, ready to get out, swing your tire iron and break somebody's windshield because it's holding you up. You're trying to get somewhere. And these people are doing this intentionally. They're holding you up and they're thinking about the same thing to the person in front of them. And that's what traders are doing when they get in the marketplace. They want to get somewhere too quick in impossible conditions. You lose sight of what you're doing. You get out there trying to prove to the world that you're better than somebody else and you wreck your ass. Turn your live streams off before they really end and go into a losing trade. You know it's all about. You know the score. They all have these problems. They're wrestling with it. You're wrestling with it. Because you're trying to do more than what's required. Follow the model. Follow the rules. Listen to the analyst in you. When it tells you you're in troubled waters, you do not flake out like you're in rush hour traffic, thinking that you're going to be able to bully everyone out of your way. What do you do? Oh, you got all these good advice, ICT. What do I do when I'm stressing out in the car? Listen to ICT. How about that? How about that? Because if you can listen to me, even if you don't like me, complain about me. Oh, bitch, you're a demo baller. We don't see you trading a live account in live. Go ahead, put your attention there. I'm a therapy. Okay? Because if you're doing that, you won't get yourself in some kind of road rage event. And you'll probably get home safely. And you won't be worrying about the traffic. You'll be distracted. And that's what the process does for those individuals that when they get in troubled waters and they're in the market and their trade is causing them anxiety, As soon as you take half off or close, if you can't do any partial half, what you have done is you've distracted yourself. You've removed that need to be right. But I could be making less money if it goes to my target. Yeah, you could. But what are you gaining? Peace of mind. You're engaging with a now resumed approach to holding no hard line, it has to be my way. When you first put the trade on, you may have had a clear vision about what it is you're expecting to see in the chart, how you're going to ride it to that profit objective, but something changed. And you have to be sensitive to that. Allowing the analyst to speak to you through your conscience, say, okay, you know this is probably not going to pan out right now. So what we should do is take half of this off, roll the stop to break even if it's not already there. Or if you have it in a trail position, don't squeeze it anymore. Just leave it there. If it turns on you and stops you there, who cares? I show you that it happens with me. I'm doing that to teach you. I'm showing you that. I can get in the trades and do full pulls, and that's all I'm going to do. But I'm a practical teacher. I'm telling you how to grow into that state. You just can't do it right out of the box. You can't. Your mind won't let you. And the people that are highly opinionated about how this stuff doesn't work, I can't do it, you won't be able to do it, you're going to fail, they're not providing anything as an alternative with consistency. So why the fuck are you listening to them? You already have enough on your plate. You know what you're wrestling with. So turn off all of that static, white noise, and listen to your conscience. Your conscience is going to talk to you. If you've been doing everything I'm telling you to do, it will guide you because of the experience you've placed in its hands. That analyst is going to guide you when it's troubled waters. But you have to let the analyst communicate to the trader in you, the one that's going to make the sound executions on the sound logic that comes from the analyst. The person that you're training with the back testing, the person that you're training to observe the opportunities in reading old data and watching real-time price action and tape reading, and in the walk forwards, and then finally doing a demo, that's when the trader arrives. He or she has no function in any of this until you get to demo. So the trader in you should not be talking about, I want to buy here, I want to sell here, I would do that, because that's not the trader talking. That's retail Rick. That's the gambler in you. So you've got 3 people inside of you right now that's going to be wrestling to be in the driver's seat. The analyst needs to be shotgun all the time. The analyst is right next to you all the time, and you're wanting to hear the logic that part of you, when it's time for your conscience to say, okay, you're in a position that's probably not as good as we thought it was. Do not listen to jokers and clowns out there looking for clout that tell you, just got to have conviction for your trade. If you know that you're absolutely 100% uncomfortable and you are not able to focus on the trade, you are absolutely doing things backwards. And these same people, you never see them execute anything, not even recorded. They don't prove anything. They prove they have an opinion that nobody should listen to. There's this clout police force that's forming, and they're out there trying to keep your attention from learning how to do this. And you're seeing people now bringing real receipts with real money, and now they're uncomfortable because they don't have that. They don't have anybody proving that what they're doing or what they've done is making them any money. See, we're getting into the thick of things here now. The rubber's meeting the road, coming down to the brass tacks. And those that are submitting themselves properly are getting results. And all the old things that they used to be able to say about what we do here They're finding that it's being met with a bulletproof vest, and it's wrecking ball proof, atomic bomb proof. You can't beat proof with real money, with real receipts, with real interviews from companies that pay these individuals. I don't own any funded account, so I'm not scripting anything. So they're doing something right. And that's the following of the process and the model. And you hear it in their own testimonies that they struggled, just like you're struggling too, but they kept pressing forward. I'm sure they saw all the things and hear all the things that all of you hear. You're never going to get it. This is becoming retail. This is never going to be retail. Look how many people talk bad about it. That right there is a testimony. As long as we got all these people hating on the idea, it ain't going to be retail. They want you to think that because they're insecure. They want you to feel like this is the worst thing for you to be doing. You should be following their garbage. Listening to their bullshit. Don't take partials. Trade animal patterns.